PwC economist Lullu Krugel speaks to us now about the latest economic growth developments in the country. Lulu, a good afternoon to you. Is this what the market expected? Is this figure in line with those expectations?
So it depends on whose forecast you look at, but the Reuters poll, for example, expected a small positive, so 0.1% growth. I mean, at the end of the day, a 0.1% contraction or 0.1% growth is, much of a muchness. So I would say the expectation was widely that the economy would basically remain flat in terms of quarter-on-quarter growth this first quarter. So not too much of a surprise there, but obviously we would have liked to surprise on the upside. Unfortunately, that didn't happen. If you look on at the year-on-year growth as well, small positive, 0.5% growth versus the market expectation of about 0.6%. So more or less in line with expectations, but in line with expectations doesn't necessarily mean good news.
What essentially does it paint in terms of a picture of the South African economic landscape? As you rightfully indicated, it is one of a narrative that says it's neither here nor there because 0.1% doesn't move the needle too much.
Yeah, if you're looking at growth to be at least higher than population growth rate, we should have sustained growth of more than 1.5%. And it's been a long time since we've seen that. And I mean, even 1.5% is low. So if we just want to stay where we are on a per capita basis, that is at least what we need. I think one of the key things that was mentioned by the Statistician General was that we've seen a contraction in consumption or consumer spending. So the South African economy is quite dependent on consumption or consumer spending. Around 60% of it, if you combine consumption expenditure by other parts of the economy, but, about half of that, around 40% comes from households and businesses and, all parts of the economy that spend basically have been under pressure as a result of high interest rates, high inflation, etc. So all of those negatively contributing to the ability of consumers to spend.
Now, the current political uncertainty post the May 29 elections, what would that mean for economic growth, particularly when we look at policy direction that is required in this country?
Yeah, so I think the most important factor is that markets don't like uncertainty, businesses don't like uncertainty, consumers don't like uncertainty. So all in all, the quicker we can get some direction in terms of where we're going, the better. And I know we are now in a period where we would normally be forming a government, etc. So this uncertainty that we're experiencing at the moment is pretty, it's different from previous elections, but it's pretty normal after an election that there's some level of uncertainty. But the quicker we can get certainty back, the better. I think if we also look at the first quarter of this year, a lot of businesses in times of uncertainty decide to wait and see. And we've also heard the comment being made around investment contracting by about 1.8%. And that's very often when businesses are waiting to see how things will play out. And I think for our economy, the faster we get to a point where there's some level of certainty that we can move forward, the better.
Thank you for your insights. PwC economist Lullu Krugel speaking to us about the latest economic outcomes, and that is the GDP figure for the first quarter of this year, contracting by 0.1%.